Okay, a very good afternoon, everyone. Welcome to the Sowtex webinar, and today we are putting up a special conversation with Archit Ranka on the World Cotton Day. So while I see that people are joining in from different sections, and we want to make this more like an engaging session, which is like an open forum that people can put up their questions, discuss. So the entire sequence of the session will be like, we'll just start very shortly, but at the same time, we will start by putting some direct conversation with Archit, and then probably take up some questions towards the later part of the show. I would request all of you, since this is a meeting mode, that's what you've decided for this particular session. So please keep your cameras. If you want, you can keep your cameras on, but please keep your mics on the mute. Whenever you want to post any question, you can put it in the chat box, or you can raise your hand. The icons are there towards the bottom of the screen. And once we will call out the names. I will try and call out some names, and then you can put up your questions directly to Archit, to the panelist. So with this, allow me to start today's session. And while people are coming in, and we will still have more people joining the room, so let us just start by a small video. Now, this is a video from our last textile sourcing meet, which happened in Dhaka. And I would like to share the brief moments of that particular event that happened while the rest of the people are joining in.
Great meeting so many people here, and you are from India. So many manufacturers, so many producers came here.
So we were delighted to have this particular event back in Dhaka, where a lot of people joined in. As you can see, the numbers that came in, we had nearly about 900 people who had joined us in that 2-day show. 30 companies had participated. From India, there were about 25 of them. And there were about 280 companies from Bangladesh that came in. The entire event was done in collaboration with BGMEA, which is Bangladesh Garment Exporters Manufacturing Association, and BGEA, which is Bangladesh Garment Executive Association, the body of all the buying houses in Bangladesh. So there was a imperative need which was cited over the months that came in together, that while China is slowing down in the textile and the fashion space, and India is perceived to be the next alternative for the global buying on the material side as well as on the garment side. And on the other hand, we have a neighbor, which is Bangladesh, having enormous line of potential. They're already doing about $42 billion worth of exports in the textile and apparels. And they are poising to reach that level to about $100 billion over the course of next few years. So understanding there's a lot of gap which is there in the entire business vertical of textile sourcing. So the team at both the sides, at BGMEA, BGEA, Sowtex, and IACCI, we all came in together, and we started strategizing as to how this gap can be done. So this was one of the important strategic initiatives that was taken up in a 2-day event at Radisson, where we've got the buyers from one side and we've got the manufacturers from Bangladesh, as well as the suppliers from India. Few selected suppliers from India, they all were brought together to engage and understand the opportunities that can be done over the ground. So this is what happened in our last event, which was on the 17th and 18th of September. So we're all excited about that. So today we have, while I can see there are people in the room now, so let's talk about today's session. On the eve of the World Cotton Day, we are putting this strategic conversation with a very senior person in the room, and senior in terms of though with his age, he is a very young entrepreneur, but with his experience, with his expertise and his knowledge, I would like to bring on board Archit Ranka. Archit is an associate and equity analyst, consultant commodity analyst, and is a chartered accountant. He is an alumnus of CF Institute. He has worked in Edelweiss Financial Services Limited and is currently a director of SMC Cotton. SMC Cotton is fourth-generation boutique cotton trading firm, which acts as an intermediary throughout the supply chain from farmers to ginners and manufacturers. And many of the world leading textile companies rely on them for sourcing high quality cotton. They are exporting Indian cotton to foreign markets since 1991, and also provide the market intelligence advisory services to domestic as well as international clients. So with so much of knowledge and expertise coming in, I would like to call upon Archit in the room. Archit, you want to come and say hi to everyone?
Hi everyone. Should I just start with the presentation, Sonu?
Just wait for some time, and we would like to put on the context of today's session first, wherein since we have all gathered today on an important time of celebrating the World's Cotton Day, and what we see here is that in the last few months since the COVID, I mean, on one side, the world was just kind of, coming out from the COVID, and the businesses were again, coming back into the motion, and everything was coming back to normal. And suddenly there were, especially for the textile and the fashion eternity, while everybody was ranking up and the business was booming, and suddenly we have this new thing coming up where the prices of the cotton yarn just hit through the roof, especially when it comes to India. And knowing that this is a very abnormal situation which we are at this point of time, where India particularly is an export destination for both the raw cotton, yarn as well as the fabrics and then the final garments. Majority of the garments that goes out of India are apparently from the cotton production. So knowing these kind of erraticism that we have seen in the last few months, especially in the textile supply chain, what is the global scenario? What do you think is the current global scenario, and where is India in the current situation at this point of time? Archit, you are on the mute. You need to unmute yourself.
Yeah, hi. Can you hear me now?
Yeah.
So from a cotton production point of view, this year, I mean, I'm sure you guys must be reading this year. If you look at from a global point of view, United States is suffering heavily this year. The production is as close to 2009 levels when we see the cotton prices rally almost from 30,000 rupees a candy to 60,000. So those levels of production, I think around 13 million bales are expected this year, which is a 13-year low. And from major other countries, like if you look at Brazil is facing some issues with their yields because of the drought. And our neighboring country, Pakistan, I mean, 40 to 50% of their production, is going to be wiped out this year because of the floods. India is expected to do well this year. Well, I mean, if you compare it on a year-on-year basis, we are expected to, have a 15%, at least a 15% higher production than last year. The acreage itself has increased by 6-7%. And God forbid, I mean, if we don't see any excess rainfalls in the month of October, then I'm sure we're going to have a decent crop. So India will be by far the only country this year which will be having, a decent sizable crop. So India will be in demand. So this is about the supply side. And if you look at the demand side, we are facing a severe challenge. Especially in the West, if you look at United States, Europe, we are seeing a heavy demand side, a recession because the interest rates are going up and the consumer spending power is going down. So, and we've seen big retailers, big companies like Walmart, Target, and all these companies, they have cut their estimates of the revenues and they have, cut down on their orders. So we are going to face a supply side. We are facing a supply side challenge globally as well as a demand side challenge this year. I mean, it's going to be very unique in a sense that once we see some correction in prices, because right now the industry is in a turmoil, especially if you see the yarn and the fabric side. There is hardly any demand. We are not seeing demand. Even the festive season is approaching, but we've hardly seen any demand, any pickup. So I mean, because everybody is waiting, everybody is fearing that okay, the prices are going to fall more. Okay, it can fall more. So the demand has essentially deferred. So that is creating an impact. Earlier there was a problem that cotton prices were too high, but now even after the correction in the prices, the demand is not yet there. I mean, that is a bit surprising actually, because we thought that at these levels of cotton there should have been demand, but even at current prices mills are running at 40-50% capacity. So the industry is in a turmoil right now, but I mean, maybe 2 to 3 months down the line we see things sort of changing, and we see some turnaround happening maybe from November, December.
So Archit, in case since you have been on the advisory board and you've already seen this coming at from a various perspective, and thanks that you shared the overall scenario on the global stage at what is happening. If you were to see the pricing mechanism, while I see that there is a very big positive that India is going to do reasonably well, which is good for the Indian supply chain. But when it comes to showcasing ourselves to the overseas buyers, for them it does not matter what the prices are in the domestic market. There is a certain product price towards the end, and they are more concerned at what is the price of the final garment which they are buying, or final yarn what they are buying, or final fabric what they're buying. Now, considering India is one of the suppliers, and so is China on the other side, and one side we see that there has been a series of backlash for Jinshan cotton, but at the same time, it is still China is flooding the market with those kind of commodities, and it's all out there in the open. So where do you see there is a competition leverage coming in, and how do we, as a scenario on the cotton buying or the trading side, or I would say the consumption side, how all these things can be mitigated together?
Anil, I have a very interesting slide in my presentation. So if you could allow me, and I could go through the entire chain, and I have mentioned about what is happening in China and how China is impacting India and the rest of the world. So I think that'll be much better and easier for the audience to understand, because there is a sequence of how I go about explaining.
Sure, sure, absolutely. Go ahead, go ahead.
I'll just share my screen. Just a minute. Can you guys see the presentation?
Yes.
Yeah. Okay. So I'll just start. Firstly, I will just tell you what has happened. Recently, if you look at international prices versus the Indian prices. So as you all are aware that the cotton prices touched an all-time high in May.
Archit, can you make it on the presentation mode?
Sorry.
Can you make this presentation on the presentation mode?
I think it's there on the presentation mode itself.
No, it is not showing. If you can go and check the cursor on the bottom of the slide of your PPT, there will be a presentation mode.
Where, I mean, on my screen.
Yeah. Okay. No, ahead. Go ahead. You can go ahead with the slide. Go ahead with the presentation.
Yeah. So what I was saying is that this year around May, that cotton prices had touched a peak of around 1,05,000 rupees a candy and 155 cents. But after that, we've seen a massive correction, and the correction in the US, or the ICE cotton, which is the global benchmark of on which everything in the textile industry is traded, be it your yarn, be it fabrics, be it raw cotton. So ICE cotton is the basic global benchmark, and what has happened is the fall in ICE cotton has been much steeper than your Indian cotton prices. So what has happened right now is Indian cotton is trading at a 15 to 20% premium than your ICE cotton, and which is affecting the entire industry. It is having an impact on the export competitiveness of the entire Indian textile industry. Why is it? Because let's say if I'm a textile manufacturer, if I'm a yarn or a fabric manufacturer, I am buying Indian cotton, right? And I'm making yarn, and I'm making a fabric from the Indian cotton, which is at a premium to international prices. But if I have to export my product, if I have to export the yarn, so for me to compete globally in the global markets, the yarn prices are trading as per the ICE prices, as per the US cotton, right, which is much cheaper than the Indian cotton. So basically, I'm not able to come as a spinner or as a fabric manufacturer. They are not able to compete in the global markets because the pricing is 20%, 15 to 20% higher. So if you look at the export data of the last 3-4 months, we are down 70 to 80%. There is hardly any exports happening in the yarn and the fabric segment. So I think this is a major impact. This is impacting the entire industry, and because around 40 to 50% of our downstream demand is from exports. So if the export demand is not coming, then the entire textile industry, it is running at a 40 to 50% capacity utilization right now. This is one of the big reasons. Domestic demand is also slow, but I think export demand is been hit very badly, and that is one of the factors which because of that, spinning mills are running at a 40-50% capacity, and this destruction in demand is putting further pressure on the cotton prices. And my sense is maybe 1 month, 2 months, 3 months, that Indian prices have to come at par to the US prices. Otherwise Otherwise, we cannot sustain for long. And this will happen sooner or later. Indian prices will be in par with, international prices. And then we can see some turnaround happening in the industry. I'll go to the next slide. So this is interesting. I am sure if a lot of spinners must be there in the presentation, in attending the call. So right now at 68,000 rupees per candy of cotton, even at these levels, we are seeing a 25 to 30 rupees loss, while converting or, manufacturing a yarn. Because at these levels of cotton, because yarn prices have fallen sharply, but the cotton prices are still, I would say, like if you compare it to international, it's expensive. Even in India, it is trading at a 10-15% premium. So now my sense is that, yarn prices are already damn cheap right now. So Indian cotton prices can see some more correction, maybe 10-15% out from here. And then we may see parity, coming back into the yarn conversion. Because right now they're at a loss. And last 6 months, they've been suffering at a loss. So I don't think this situation can last for much longer now. This, I think I've already explained, which we discussed before the presentation, about concerns around the global cotton crop. If you look at what is happening in United States, Brazil, Pakistan. So there are challenges, there are supply side challenges. But what has happened is, because of the macroeconomic uncertainty and the rise in interest rates in the West, the consumer spending power has also fallen down. So the fall in demand has been much sharper than a fall in supply, which is leading to a correction in the prices, basically. So this is our balance sheet, world cotton balance sheet, and the world cotton production, which is estimated by the USDA. These are not my numbers; these are the USDA numbers. If you look at, Sonil, if you look at the United States data, you will see that the number is 13.8. So as per the last estimate, USDA had done some 12.6 million bales, but now they've revised it to 13.8 million bales. But the 13.8 million bale estimate, it is still a last 13-year low. And if you look at the world production, one should take these numbers with a pinch of salt, because at the end of the day, these are all estimates which are done by the agriculture authorities. Like, I feel that the India number here is inflated. India number will go down.
Archit, can you do one thing? Sorry to interrupt you in between. If you go to your slide, towards the bottom of the slide, bottom of your screen on the PowerPoint, there will be three icons.
Sorry?
And one of the icon is the presentation mode. The last towards the right side corner of your PPT.
More, right?
Yeah, PPT, there will be a screen. There will be three icons to the bottom of the screen. In the bottom right of your screen.
Okay, bottom right.
In the PPT.
Yeah.
Yeah, you can see there is one icon which is showcasing the power presentation mode, the third icon. Just click on that icon.
This one. Hello?
Yeah, just go to the bottom and click on the PowerPoint thing. I can see it on your screen here.
This slideshow, right?
Yeah. Just click on that. Click on that.
It was already in that mode, I think.
No, it is not showcasing in the slide mode.
Okay. Okay, am I audible now? Can you see the slide?
Yeah, I can. You're audible, but I think the numbers are not very clear on the screen for everyone. That's why I was requesting you if you can make it on the.
Okay.
Okay. Anyway, go ahead. Let's keep going.
So basically, the world supply is tight. As I explained, the world supply is tight. But what has happened is the consumption is also expected to fall. So that is pushing. That is putting pressure on the prices. This is the Indian cotton balance sheet as per the CAI. Again, you have to take these numbers with a pinch of salt, because we have our own analysts on the ground. So what we do is we have our own estimates. We don't rely on the CAI numbers, but we just take it because the market is affected by the numbers which are published by the CAI. But as per the CAI, last year's crop was 315 lakh bales, but our best estimate suggests that it was not more than 295 lakh bales. So this was last year's production. And coming to this year, like I said, the acreage is increased by around 7-8%, and the yield is also expected to increase by another 7-8%, because what happened last year, the yield got hit because of the excessive rainfall in the months of September and October. And if we don't see a very huge rainfall in the month of October, then we are expected to have a good crop, at least a 15% higher than say last year. And just to give one point, that Indian cotton yields are amongst the lowest among the big cotton producing nations in the world. So it is nowhere close to, let's say, United States or a Brazil, which is 3 times more than us. So this is the China point which I was coming to. So I mean, if you look at what has happened in China, that Xinjiang cotton has been banned by the West, especially the United States. So they are not buying anything made from Xinjiang cotton, be it your yarn, fabric, garments, right? And that is why we are seeing, or if not we are seeing a shift in India, at least we are expecting a shift to happen in India in the coming years, wherein we are expected that the supply chain is expected to move to India, and India is going to take some market share away from China, right? This is what is expected. India has not taken advantage till now. Vietnam and Bangladesh have taken much more advantage of the demand slowing down in China. So one more thing which I want to highlight, which is very interesting, is that Chinese cotton prices, which are trading around 13,000 rupees per ton, 13,000 yuan, sorry, 13,000 yuan per ton. So Chinese cotton in the last 10 years have always traded at a premium to your US prices. Chinese cotton has always traded at a premium to ice cotton. But after this ban, especially in the last 6 months, what has happened is China has started trading at a discount to United States prices. So now if China is trading at a discount and India, which used to trade at par with United States cotton, is now trading at a premium. So the gap between India and China prices have increased significantly. China is much cheaper. And that is why what has happened is China is sort of spoiling the yarn market. China is able to manufacture cheaper yarn, and China is expected to consume more domestically, because now their yarn is much cheaper than the Indian yarn, and that is a big challenge which we may face going ahead. Another challenge is, of course, which I mentioned about the subdued demand in the West, the macroeconomic uncertainty, the rise in interest rate, which is all going to lead to a downfall in the consumer spending. Now, coming to my last slide, which is basically the price outlook. So currently, at current prices are trading at 68,000, but I mean, next month's contract are happening at around 62,000 rupees per candy. At 62,000 rupees per candy, like I said, we are still at a 15% premium to US prices. So my sense is, unless we normalize and unless we come at par with the ice cotton prices and export starts happening, prices will continue to see downward pressure, and we have not seen arrival pressure till now. Arrivals are, right now it's been on hold by the farmers. Very little arrivals are coming, but post Diwali we're going to see bumper arrivals, and that is going to put further pressure on the prices. And I don't see much downside in the yarn prices because they've already fallen a lot and mills are already in losses. But I see further pressure in the cotton prices. So yeah, this is it.
So while you have raised some very interesting facts and figures comparing India to China and how China is kind of disrupting the price mechanism coming in. If you were to see this completely from a holistic way, especially when it comes to the buying side of it, obviously everybody wants to know what is the right timelines which we are looking for buying. And you just mentioned that post Diwali, you see that there is a lot of crops that are going to be flooding in the market. So what is your opinion? Should the people be waiting till Diwali and they would resume their buying after Diwali?
See, I will tell you what the smart guys are doing and what we are suggesting our clients to do right now. So there is an anticipation of a fall in prices, because as the arrivals are going to peak and demand still remains subdued, it is expected. And as long as we are expensive to the US prices, we see downward pressure on the prices. So if I am a yarn manufacturer or if I'm a fabric guy, what smart people are doing is basically they are selling yarn first. Okay, let's say Sonil is my buyer and I am a yarn manufacturer. So what I will do is I will book the order first, let's say at a 280 rupees yarn price. I don't have the cotton with me right now. I will take the order first, and when as the market falls, I will try and cover the cotton, so that thereby making a profit or making some decent margin or avoiding my loss. But if I buy cotton now and book the sale now, I might suffer losses because of the mark to markdown in the inventory, and I might suffer losses because of the fall in cotton prices. So what? So this is basically they are shorting, and what shorting means is basically you're selling first. I don't have the my product with me, but I'm selling it at a predetermined price. And then when the prices fall, I will buy the commodity, I will manufacture it at a lower price, and I will sell it at a predetermined price. This is what smart people are doing in the market right now.
Absolutely. While you said it's a genuine arbitrage opportunities that can be created into this, but when we're looking this from a complete holistic side on managing and managing the complete scenario of when to buy and the opportunities of buying, how do we manage the risk of losing out on the pricing or on the profitability? What if the orders coming in late, or if the orders are coming in directly to the mills, they have to be ready with the basic gray production of yarn and with the fabric. So how do we mitigate those kind of scenarios where the demand is anticipated to be very high coming in the coming months, with global shortage on the other countries, and the only country that now comes into the picture is India, where India is having the bumper crop which is anticipated, and people are going to be placing the business in India. So how will the mills and the fabric weavers or the knitters, how will they manage their risk of buying at this point of time?
See, right now it's very critical. It is, what is advisable is right now is to hold minimum inventory, and in case they need to manage the risk. Let's say if they are having a surplus inventory, because if I'm a fabric manufacturer, there is little what I can do with my risk management, because there is no exchange or there is no hedging mechanism. But if I'm a yarn manufacturer and if I have surplus cotton with me, what I will do is I will hedge it on the exchange if I have surplus cotton with me, to avoid my mark to market losses. And if I'm a fabric manufacturer, what I will do is I will keep bare minimum inventory of yarn. Whatever orders I have in hand with me, I will keep that inventory. As and when I receive the orders, I will purchase more. I will not purchase any single extra raw material, because I would want to save as much as I can on my raw materials, and I would want to avoid the mark to market losses. And once situation turn, once we see cotton prices in par, let's say with the international prices, then there is hardly any risk to do the business, right? Then there is hardly any risk. Then I would suggest the fabric manufacturers, to load up on the yarn, because that is the time. If we see, because global supply is already tight this year, if we see some revival in the demand, then the prices are only going to go up, and it's already so down, it's so beaten down yarn prices. We can see some correction as cotton prices fall more, but another 1 to 2 months down the line, as a smart buyer, what I will do is right now I'll be light on inventory, but as months pass, I will try and load up on the inventory in anticipation of a good demand, because demand cannot go away, right? Textiles demand cannot go away. It can only be deferred. What is happening in the Europe? Energy crisis has happened. People are spending more on energy, more on food. They have deferred their demand on clothing. But it's not that the buyers will not come. Buyers will come, but maybe they'll come after 2 months, 3 months, 4 months. We don't know, but we have to be prepared for that. So as we see prices falling more, I think in 1 or 2 months, it'll be a very good time for even fabric manufacturers to start buying and to buy in bulk, maybe, to load up, basically.
I see this as a very interesting opportunity also, and a very interesting challenge also for the supply chain. The way that traditionally the Indian market has in the supply chain worked is there has been time when the yarn has to be procured and the fabric in gray has to be weaved in, so that when the demand of the actual fabric comes in, which is towards the month of November, December, January and February, the gray is already ready and the mills are just dying and pushing out the deliveries to the manufacturers of the garments. Now, if the demand is going to be peaking out, which normally does every time in the November, December, January, and there is not enough of inventory on the gray side, how will people cope up with their rising prices in that particular time? And how will the people take the global orders? Archit, you are on mute.
You're absolutely right, Sonil, because what, the pipeline is extremely empty right now. There is, people are everyone in the value chain. What they're doing is they're going light on the inventory, right? And when the demand comes, then it'll be. My sense is it'll be somewhere similar to what happened after COVID. What happened after COVID is people shut down their plants, right? And they never thought that the consumer will come back so fast. And when the demand came, the yarn prices, fabric prices, cotton prices, because we never thought that this demand after COVID, we never expected that the demand would come back so sharply. And to be honest with you, it's very hard to predict demand. See, supply side picture is very clear in front of us, right? But it's very hard to predict demand, and we can only prepare ourselves. And if you look at yarn prices right now, it's 275 rupees per kg. I mean, 3 months back, cotton was selling at 275 rupees a kg. I mean, it's so cheap right now. I'm not saying it's a bottom or something, but I mean, it can also fall 10-15% more as cotton prices fall more. But then that will be the time for smart buyers, smart people in the industry, to start loading up on the inventory, to make value purchases, because as and when the demand returns, they will be the ones who will be having the last laugh.
So, I mean, say this is kind of a good situation wherein while the prices are coming down and we are heading to a peak season in the coming months, especially when it is cotton, because the cotton consumption is all towards in the winter time, so that the actual production are out on the retails during the summers all across the world. So with all this coming in, I would say this is the time when people should start managing their risk of buying. And there was one interesting point that you made on arbitrage, right? Where you said there was an arbitrage opportunities in your slide one in the middle. And you said that there are differential of the pricing in the US and the China and India. How can people leverage on that point so that while they are making purchases right now, at the same time, they don't lose out on the pricing, which may be there in the future?
So basically what, what big buyers or yarn mills, what they do is basically they have an account on the ICE, which is the international, which is the ICE futures, where, the US market where cotton is traded, which is the global benchmark. So you need to have an account there. Maybe if you have an office in US or Dubai, you can open an account on the ICE and you can trade on ICE futures, ICE cotton basically. So what MNCs, multinational companies like your Louis Dreyfus or Olam, what they are doing is they're very smart. They're taking advantage of this arbitrage. This arbitrage, this difference we've never seen, in the last 10 years, we've never seen such differential in the US and the Indian prices. And these opportunities comes very few in the lifetime of a trader. So what these guys are doing is they are buying cotton on New York futures, they are buying ICE futures, and they are selling India November, December delivery, thereby making that 10,000 rupees candy spread. And as the differential between India and US decreases, they will close their positions and thereby making a profit. So it is not advisable for everyone because their core expertise is making manufacturing or making yarn, fabrics. But this is a tactical play to take advantage of the opportunity which the market is presenting. And savvy investors or savvy traders, they do take this opportunity, and I feel it must be leveraged. And these opportunities don't come very often, to be honest.
Okay, while the while the sunshine, one has to make sure that they make the hay while the sun is shining. So for the Indian companies, what is the advice that you are going to give it to them, especially because we see majority of the audience here are from India, and maybe the conversation gets broadcasted in Bangladesh later on. So what kind of advice you want to give it to them on the arbitrage side? Is there any opportunity for a normal medium to medium size to a small to a medium size manufacturer or a mill here?
See, there is an opportunity, but there are some legal and compliance which, so if one is a decent medium size entity, then obviously they can set up a small entity in US or Dubai, and they can open an account and they can trade ICE futures, they can buy ICE there. That is an opportunity which is there. But I would suggest that only if you are well versed with the market, if you have deep knowledge, then only you enter that territory. Otherwise, best to avoid it. Just try and be light on the inventory right now, and as in when you see some green shoots of demand coming up, just jack up on the inventory. I'm sure you'll make money.
Great. So obviously, I would say we've kind of summed up all the questions from my side, and now that we have so many people in the room, and the house I want to open up to all the people who are in the room. We have Archit in the discussion side. Archit is again, as some of you have joined in late. Archit is a senior analyst, has been worked as on the commodity side, on the risk side, and his company is already running a boutique trading company on the cotton futures as well as the cotton trading side. So if you have any questions, and of course, I would leave everyone up. You can, we will not restrict the conversation only to English. अगर आपको हिंदी में भी बात करनी है तो आप अपने आप को unmute कर लीजिए. Have questions, you can raise your hands, and we can take one by one. So you can raise your hands towards in the chat box, or you can leave your name on the chat box and I can call out the names, and then we can have we can take your questions here. I see there is one coming from Mathur's Shining Apparels. Mr. Mathur, do you have any question?
No, as of now, I don't have any question to you. Okay, if I have any question, then I will write to mail.
Okay, no problem. Anybody else? If there is any question for Archit here? Okay, while people are still, I think they're still absorbing what you have just shared in totality, Archit. Let me have another question for you. You did mention that there are, on one side, there are buying opportunities. And on the other side, you are recommending that people should go stay light on the inventory. Now, considering that, I come from an industry side, and I see there is going to be a robust demand for the cotton as well as the cotton made products out of India, out of Bangladesh. So with such important work coming in, important orders and business coming in, how would a person or a mill, whether it is a weaver or a spinner or a knitter, what kind of calls he should take right now? Because if you say that we light on the inventory, how are they going to support their turnaround of the business when the business is entering post Diwali? Because that's where majority of the business happens post Diwali, from Diwali up till the March of the year. With 5 to 6 months are the peak time for the cotton business. So what is the right way going forward for these kind of things, this kind of timelines?
I would just advise them to closely track your New York futures with respect to the Indian prices. And once you see that Indian prices coming at par with New York, then I'm sure the export demand will suddenly come up, because then India will start becoming competitive, and they need to be prepared. They can't be disheartened, or I'm sure last 6 8 months have been really tough, but I mean, they need to prepare themselves, because they need, if you look at the big picture of next 3 years, 5 years, 7 years in India, even if we get 10% of what China is doing right now, we are going to have a huge demand in India. These are near-term challenges which will be there, but we need to prepare ourselves. We need to just stay light on the inventory and keep tracking New York futures with Indian prices. Once we see normalizing prices of India with the rest of the world, that is the time we need to be prepared that okay, demand can come anytime, and then we should just be ready that time. This is all I can say. And just zoom out and look at the big picture, and don't be distracted by what is happening in 1 month or what has happened in the last 3 4 months.
So, actually, that leads me to second question. Since you come from an advisory perspective, and and that's an area where you expertise in, along with your boutique business. So, how can people leverage out, and how they can understand? Because understanding the New York futures and understanding the current pricing in Indian market, and what's the pricing in in China or in Brazil, for a normal mill or a weaver, this becomes a very tricky and a very complicated situation. How can it be streamlined and created in a way that people can understand and they can make it more meaningful? How can you or your company help them, support them to understand this complete scenario in a simplified way?
See, it's very simple. We just like, let's say if you're tracking New York futures on any website, you can see cotton prices, right? Right now it is trading at what, 82 83 cents per pound. So in America it is traded per pound, and in India it is traded at per kg, right? So we just need to convert the dollars into rupees and the pounds into candy, and then we can get the INR candy price, and we can compare it to the current prices what is trading in India.
So in any way, can your company help people in the room or to the industry at large understand this matrix and get them to support and make some right buying choices here?
Yeah, I mean, we can help people to sort of manage their risk, and we can help them in their procurement planning based on our view of the market and our market intelligence, because our people are there across India, and we have network across the world. So we keep a track on what is the demand supply situation for cotton and yarn in, let's say, Turkey, Bangladesh, US, Europe. We have a huge network over there. So based on that, what we do is we try and judge, and based on our experience. I mean, I am here representing my firm. These are not my personal views. My father, my great grandfather, we have a 60-year-old history, right? So we have a lot of intelligence on the market, and based on that, we can try and help them to time their purchases and not to get hit by mark to market losses, and take the best advantage of what they can do in terms of buying decisions. And even a 2 to 4% of cost saving on a big manufacturing entity. Let's say if I'm buying 100 crores of yarn, 100 crores of cotton, if I'm a manufacturing unit, even if I save 2 to 4% based on the market intelligence and timing the purchases, that's a huge delta, I consider. So that is where we can help the buyers and the people who are there in the value chain.
Thank you so much for sharing that. So as I said, this is an open discussion and open engagement. I would encourage people who are in the room. This is a good opportunity. You can unmute yourself, you can reach out and you can talk and you can share out your open concerns when it comes to your cotton pricing or your buying decisions or how you are feeling working with the international buyers. In case any of those questions are there with you, this is the right opportunity. And it's an open forum. We see there is a lot of people and there are people from Bangladesh also in the room. So please take this opportunity to open up or network in case if you want to just unmute yourself, share about your company, and then you want to ask any question, please do that. To all the members, आप opportunities लीजिए if you have any questions here at this point of time. Hey, Archit, I don't see that.
Hi.
Yeah, please go ahead.
Just one question. We are into the sales of yarn, basic the market from various countries. You mentioned that cotton fiber right now is getting the little bit of premium compared to the Chinese cotton and other fiber, right? But the trend of yarn prices currently in last 15 to 20 days has been observed that Indian prices are on little better trend. Better means cheaper. I mean to say, compared to Indonesia, Vietnam. So, is it possible for you to highlight what can be the possible reason for that? Cotton fiber is on premium side. Yarn prices are on lower side. I am talking about Indian yarn.
You want to address the question to Mr. Mukesh Sharma?
So you're saying that Indian prices right now are much cheaper than your international prices, right?
Indian yarn prices are trading at lower side than Indonesia and Vietnam, while Indian cotton prices are on higher side.
Yeah. So this is a function of both domestic as well as global demand, and why we are seeing that is because let's say I'm a fabric manufacturer, okay, and if I have to buy yarn, so what I'm telling my supplier is basically that your cotton prices are falling, so you give me some discount. And what is happening with the yarn guys also, what they are doing is they are downselling it deliberately, because even if they keep the inventory with themselves for like 5 days, 10 days, so they will get a hit because prices are falling every day. So what they are doing is वो बोल रहे हैं कि वेयर हाउस में रखने से अच्छा 5 रुपए 10 रुपए और कम करके बेच दो, because they don't want the inventory in their shelf. So that is why it is going to the extreme now. So, and also this is an indicator that we have very limited room on the downside now. That is what I can suggest based on what is happening.
So it means if we look at the demand trend also and forecast of demand, yarn prices may fall down further by 10-15%.
See, yarn prices have already fallen much more than cotton, and yarn demand has been weak. Now, let's say if cotton falls by 15%, I don't think yarn will also fall proportionately. Yarn will fall lesser than cotton. This is what I reckon.
Okay. Thank you so much for your input.
It may fall 5%, it may fall 7%. But let's say if cotton falls 20%, then I don't think yarn will fall another 20% because it's already fallen so much.
Agree with you. Okay, thank you so much.
Thank you.
So while while Archit has already shared two interesting scenarios, I wouldn't say it is interesting, but this is a current scenario at the global level. At one country, which was the highest yarn producer, Brazil. Brazil is facing the drought, and the other comparative country, which is Pakistan. Pakistan is at a situation where it is already in a situation where 50% of the crop is already gone for this particular season. So on, I would say the interesting or there can be a better gain side on this is if there is a further drop in the yarn. I would say anybody who is part of this complete conversation, and I am just giving an industry perspective, it is a right time to start investing into this commodity, or I would say into your material products. If you are already a garment manufacturer or an exporter, you should start picking up the value deals which are available in the market. Of course, with the mills, what I can see is that the fabrics which are being manufactured, considering the demand will come up and it will peak towards December and January. The prices actually will hit the all-time high at that point of time. So before Diwali, the mills are always looking out for cash. This is again, I am saying this is all our industry perspective that I'm sharing.
Yeah, one should not go all in right now. One should wait for cotton to correct more. Maybe once cotton corrects 10%, 15% more, then that is a good time to buy yarn, cotton, everything, because at those levels, we just need to wait for the demand to come, because at those levels, the downside is very limited for us.
Right. So there is another interesting question from Gaurav of Vishwas International. How to source or import fabric in a lower price, cotton from foreign as compared to India?
I think you will be able to better answer it.
I can, and I would like to invite any of the viewers who are part of this conversation. Before I answer this question, in case if anybody would like to answer and contribute to this question. The weavers who are there in the room, anybody who is into the weaving segment or the mills, would they like to answer this? Anybody representing them? Okay, I see nobody addressing to that question. So let me try and give a slight perspective to this.
Sonil, just to interrupt, Sonil, I'm sorry. I have a meeting scheduled at 5. If you don't mind, I'll have to.
Yes, you can log off and probably will be. Okay, before you leave, I'll answer to that, Gaurav. Archit, before you leave, you want to give any final comments or a closing comments to the people in the room?
See, I've already shared a lot with you guys. What I can say is just keep a track on the prices and wait for the demand to bounce back, and be smart in, as in when you see another 10-15% correction in prices in the cotton yarn, that is the time to, go all in and just wait for the demand to bounce back. Also, Sonil has asked me that, SMC Cotton and Sowtex can sort of collaborate and offer procurement solutions for you guys if you want some sort of help with procurement planning and, risk management for like the manufacturers, in case they need procurement planning, risk management. If they need our expertise, then, we'll be happy to provide it. And we can discuss it offline if any one of you is interested in that. Yeah, that's it.
So Team Sowtex, you can share the link of Archit in case anybody wants to reach out to them. They can. There's a link on the chat box. You can reach out to on that link. You can post your inquiry, and we will be happy to connect you with Archit post this conversation. So thank you, Archit, for being in the show and sharing your valuable insights on this very strategic and important day. And it is always good to interact and engage with industry at larger. And I'm sure with your level of expertise and knowledge and the kind of background you come from, your comments and your insights are very, very valuable for this.
Well, we are all learning.
Yeah, absolutely. We're all learning from each other, and we're happy to be part of this. So,
Yeah.
thank you so much.
Thank you so much. Thank
Yeah.
you.
So while Archit has left, and in case anybody wants to connect to Archit, they can leave out and they can reach out to the link on the chat box. So to address the question of Mr. Gaurav, how we can source and import fabric at a lower price. Now, it's a very dynamic question which comes in at this point of time, because India being one of the major exporters of cotton yarns to the global markets. So there is always some sort of protective environment which has been given by the government of India. While at a certain point of time, and this is a cotton being a very important commodity for our nation as a whole. So government regulates the pricing, and it also it doesn't regulate the pricing, but it regulates the import of cotton into India, as well as export of cotton and cotton products out of India. While the cotton fiber has been of lately been banned at certain point of time, and again it has been uplifted. So I'm not on the correct side as to what is the current situation at this point of time. But I see the best way to leverage your cotton and product line is ask your buyers to move to man-made fibers. And right now, that is the best alternative, I would say, coming in. And it is apparently a very, very big space, because China is vacating the polyester garment textile space. So even if even if you're leveraging on the fact that if you can switch over to a man-made fiber, whether it is viscose or polyesters or blends and other things that are coming in, if you can switch over, there is a huge advantage and huge production availability from the polyester and this man-made fiber side. While cotton is something which is available from China, cotton fabric is available, cotton yarn is available, but we are not the right forum to address what are the kind of duty structures into this particular area. In case if you are looking at for the export purpose, I would say this is an opportunity where you can import on the duty-free kind of documentation or on the bonds, and you can re-export these products to the other markets. So that is an area which is opened up for the Indian exporters especially. So that is an advantage you can take up. I know for a fact that there is a lot of pricing, there is a lot of value deals which are available in China, especially when it comes to 100% cotton and other cotton blended fabrics. So that is an opportunity you can expertise this. If you have cotton importers right in your supply chain, you can reach out to them. Or in case if you're looking out for more people, you can reach out to Team Sowtex, and we can help you connect with the right set of cotton fabric suppliers from China as well as from Indonesia. So these are some of the opportunities that can be addressed through that area. But this is especially for export side. For the domestic side, I would say this is not the right time to import fabrics, but you can switch over to the alternative fabrics right now. I hope, Gaurav, I have addressed your question to my reasonable limits that I have knowledge on this particular subject. I'm not the expert on this, but I'm just sharing from that. But any other questions? And as I said, this is an open forum. And since today we are on the World Cotton Day, it is good to address and engage with the fellow industry players in the market. You have different kind of segments here in the room. So if any other question is there, we can take it up now. You can unmute yourself, you can raise your hands, you can post it in the chat box, whatever you feel comfortable, feel free to do that. So as I see, there is not much questions coming out here right now. We are almost towards the end of the session. And before we leave again, or before we close the today's session, I would like to share the highlights again from our last event, which happened in Bangladesh, where we had an important engagement showcasing 30 companies from India and getting them connected to 300 exporters in a 2-day event at Radisson Hotel in Dhaka. This event was in collaboration with BGMEA, BGAA, and IICCI. So I'm just sharing that highlights once again for everybody.
Great meeting so many people here, and you are from India. So many manufacturers, so many producers came here.
So again, that was a good turnaround of the show, good engagement between the two countries post the meeting of two prime ministers in the month of September. We hosted this event on the backside of the historic treaty between India and Bangladesh that came in up. So with this, I would say we are gearing up to make some of these strategic meets and more meaningful meets between the countries and the nations and different clusters that we have been doing it in the past. And I hope this becomes more meaningful and people are able to interact and engage with each other at a much more faster way. So as we see that we're almost towards the end, any other question? If you have, you can pose it up. Or we can conclude today's session. So last final thing, I would say there are a lot of interesting areas we are opening up. Please look out for information coming out from Sowtex on the emails or on the WhatsApp. There are a huge set of inquiries that have started getting generated from Bangladesh side, looking out for key Indian manufacturers of fabrics and yarns. Particularly, especially in the polyester and cotton segment, they are looking out for a lot of people, a lot of mills to support them for their export businesses. So anybody who is facilitating or would like to join or would like to take the advantage of the current set of demand which is originating from Bangladesh, please reach out to Team Sowtex and we'll be happy to connect you to the relevant set of buyers. So with this, I'm closing today's session. Thank you so much, everyone, for participating and giving your valuable time in today's session. Thank you so much.